and see me all right at this point in time, but give me 1 second to just pull everything up because I literally just restarted my entire computer. So yeah, we should be all right. Gotta love streaming. Am I online? I am online. Sorry about that, everybody. Should be back. Should be all right. I just had to restart my entire computer because everything went to absolute shit in about 4.5 seconds. So that was not definitely not super great, but is what it is. And there was no exit scam, but in no exit scam on the crypto happy hour. Trying to go the full hour. And oh shit, here we go again with technical difficulties. And it looks like I still have them in some way or another because my computer is just absolutely eating it. Hold on. Who knows? What is happening with YouTube? Okay, sorry about that, guys. I back. Everything's good. I needed my spent a bunch of money on a new computer like a year ago, and now I think everything should be working. But that was the first time I've ever been streaming where it just completely gave out, and yeah, I have no idea. It just made like a zap sound, so it's probably not good. I should probably check on that. But hey, we got to close P Hub now. Never. So just talking about things in general with what's going on. And my man B Smooth says, Bobby, shut the F up with the fundamentals. They clearly don't mean shit. And yes, that's true. And yes, it's not true. And that's a bad kind of talk around answer. But I do think, especially when you look at Bitcoin, fundamentals do matter in the long run. Short term fluctuations, they absolutely don't mean anything, which I think you're seeing right now. And I also do think that there are kind of a variety of components that go into it. Somebody had just mentioned the other day about, there's a tweet on something on Twitter that got a lot of traction. Obviously, if you post anything bullish on Twitter, you get a ton of traction. It's the same thing every time. But this person put out a tweet that at surface level, I don't remember exactly who it was, but at the surface level said, the things that are happening on a macro level are incredibly bullish. You have Bakkt launching for institutional investors. You have SoFi, which I'm not sure if you folks saw. SoFi launched their crypto investment product. So if you have a SoFi account, you can put your money into Bitcoin and crypto assets. I think they're using Coinbase for that. And there were one or two other things that they also mentioned. But really the big thing was like Bakkt, SoFi, and a few other things. And they were saying, you know what, guys, regardless of the price fluctuations, this is incredibly bullish. And I do think that there are certain bullish elements of that, but it also doesn't necessarily solve major problems as well. So there's kind of two sides of the coin here that I think are important when you look at the quote unquote fundamentals and some of the BS behind it. Fundamentally speaking, the on ramps for the industry and the infrastructure that's being built in the industry is light years ahead of where we've been in the past few years. Somebody talked about it the other day, and I think I talked about it on the podcast, where the kind of joke was, 5 years ago, you basically had to buy Bitcoin, or one of the only places to buy Bitcoin was on a repurposed Magic the Gathering trading card website, Mt. Gox. Even maybe a little bit before that, you had to go to a 7-Eleven or to like a Western Union to buy Bitcoin through BitInstant. Like the levels of sophistication that we've come from Mt. Gox, which was a guy who loved just boba tea and freaking Magic the Gathering cards, to the New York Stock Exchange and ICE running a Bitcoin derivative or kind of a Bitcoin futures contract, is incredibly, there's a night and day difference. On the other end of the spectrum, though, it doesn't necessarily supply or solve the demand problem. And that's what you're looking at right now, at least in my personal opinion, is yes, the infrastructure is getting built every single day. There are improvements to the infrastructure every single day. If you tell yourself that is not the case, that's an incorrect thought process, in my personal opinion. I get an awesome chance to talk to these companies on a daily basis that are building stuff in this space, that are building infrastructure, building products. Everything is, the products themselves, the infrastructure, it's getting better on a day-to-day basis. On the other end of the spectrum, there's not necessarily new people coming into the industry. That is where the problem lies. And for certain assets, especially for something like Bitcoin, where you have a supply and demand issue. And if there is more demand than there is supply, obviously the price is going to go up. The price has gone up so far this year, but has pulled back significantly since we hit that $14,000 mark. On the other end of the coin here, you have just this kind of thought process ever since 2017. And I don't necessarily know if we've kind of solved that demand or if we've seen any type of increase or spike in demand. So I do agree with you where somebody says the fundamentals don't mean crap or shit or whatever. And that's definitely true, especially in the short term. I think supply and demand is the biggest issue in the space right now, and there really is not a demand, or you've seen this specifically with altcoins. The altcoins have just gotten absolutely smoked because there is no demand for speculation on altcoins. No one was buying altcoins to use them, so they're buying them to speculate on them, but there was no greater fool. There was no next person coming in to speculate on top of what you already speculated on, so people started giving up, and then that started a cascading shitcoin waterfall, and then here we are. So Stefan says, can you pull up the backed volume? Let's see. Yeah, so we got the monthly contract was more than the daily contract, I believe. So the monthly contract, you can see here, the volume is 128, which is 1 Bitcoin per contract. And if we look at the daily, you have let's see. Oh. You look at the daily, what do we got here? Maybe I don't have the right product specs. We have 128 Bitcoin, which is not a massive amount in comparison to kind of everything else, which is something that I think, when you look at Back's pickup, people are all of a sudden now throwing that as a reason that institutions are not coming into the space, or there is no demand for institutions. And I've seen conversation in both ends of the spectrum. I've seen people that say the kind of hedge fund leaders and people that run the institutional class or have actual relationships with the institutional class saying, yes, there are investors that we're talking to, family offices, hedge funds, a variety of folks that are interested in exposure to this asset class. And then you have other people that point to, hey, Bakkt hasn't had any pickup this week at all since launching, and there clearly is not demand for it. I would say that the real answer is probably somewhere in between, on where, as everything in life and as everything, especially in this industry, there's always these two opposite sides of the coin that are freaking out at each other. And you have the one side that says institutions are coming, the other side that says they're never coming, and you're an idiot for believing that. It's probably somewhere in the middle. They're probably coming. They're probably not coming tomorrow. And there are people that are actually interested in this stuff at a top level. So GBU Profile, what's up, brother? Thank you very much for that super chat. Let's hope donations don't make you go offline. Sad hour can be happy hour with the right tasty beverage. I appreciate that. I mean, I love a good tasty beverage, and after today, looking at the Delta account, I might need a tasty beverage this evening while I'm making dinner after dinner. So yeah, I definitely appreciate that super chat, brother. Thanks, Be Smooth. And so CryptoFish says, I don't mind the dip, helps me get better positions on my trading. And this is something where, I mean, for me, I am, as a lot of you guys know, I'm a big fan of dollar cost averaging. I've kind of been that way, and I continue to do so with Bitcoin and also with ETH. More so, I donate for example, like my typical kind of move is on a weekly basis. This is just made up numbers, but the ratio is right. I'll put $100 into Bitcoin on a weekly basis and $50 into Ethereum. Let's say twice as confident in Bitcoin being long-term successful as Ethereum from an investment standpoint. So let's just say I put 2 to 1 into Bitcoin and then into Ethereum. When something like yesterday happens, I went into Coinbase and immediately bought as soon as I saw the price go from $10,000 or so all the way down to $8,400. I bought in the $8,400 range, and then I bought ETH at about 163, 164. So yeah, I'm still down a little bit, but I would rather, when in addition to doing my consistent dollar cost averaging that I don't use a brain, I just automate it, I go for it. When I do see a big dip, I buy it down there as well, and I'll buy a little bit more too, just because if it bounces, I had a great opportunity. If not, I just consider it an additional dollar cost average, so I don't hate it there at all. Dollar cost average to zero. Yeah, well, that's my money. So if I do, I do. If I don't, we'll see. Paul Joseph says valuation on most of these cryptos are still way too high. Bottom line, I would agree on some assets for sure. There are a number, like across the board. Across the board, there are a ton of cryptocurrencies that are definitely overvalued, significantly overvalued. And to that point, you are more than welcome to short a great deal of them. And I do think that I am not opposed to shorting a number of assets. I'm still waiting on HBAR to get added to a margin trading platform. I've been licking my lips to short that since it was at like 8 cents. I think it's at like 3 cents now. So that kind of sucks. But yeah, there are a number of different, especially as you start to see more and more of these large cryptocurrency projects get released that raised in 2018, like late 2017, early 2018, the large, mostly VC funded projects. I'm personally pretty excited to put some money behind shorts on those, in addition to some of the long positions I have. So if I do, I'll definitely let you know. But as of now, unfortunately, I am not short anything. Enrique Garcia, best places to short these altcoins. Well, if you're not in the U.S. or, you know, BitMEX is obviously one of the most liquid places to short crypto. You don't have every single altcoin by any stretch, but there are definitely some options out there. FTX, which is another one that I think a lot of people are getting pretty high on, but it's also fairly complex too. I think a lot of people have no idea what they're doing when they use FTX. I myself have not used it, but a lot of people have started to use FTX because they have a variety of derivative tokens and kind of assets that you can trade. And specifically, they have these Doom tokens that are basically 10x leveraged shorts that you can trade, as well as they have what they call like the shitcoin index. So I think it's literally called like shit on the exchange. So if you were to go, you can trade, you can margin trade shitcoin. You can buy these Doom assets as well or you can also alternatively buy Moon assets, but they are relatively or extremely, they're an extremely easy way to lose your money, especially with the volatility of crypto in general. If you're talking about how a lot of this stuff works, I think it is, it's definitely a pretty volatile place to be when you're talking about 10x leverage shorts. If you use Bitfinex also has margin trading as well if you're not in the US. So if you're in the US, the options for you are definitely more limited, but if you want to get creative, you can figure things out on your own. Yeah, somebody else mentioned Bybit. I mean, so the one thing to think about too, when you look at all these, and this is just general advice on my end when you're looking at trading, and number one, just margin trading in general, leverage trading in general. Be very, 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 very careful. Just it's the easiest way to get like. I'm sure if you've tried it before and you get cocky, you do whatever. It's a very, very nice way to get liquidated. Very nice way to lose a lot of money. So be extremely careful and cautious when you are doing anything with margin trading, but also when you're looking at a lot of these exchanges, especially on Twitter, a lot of people are talking about these things. You see, BitMEX is the best, then you see Bybit's the best, then you see Deribit's the best, then you see FTX is the best. And after every single one, there's a ref link. So there's always an incentive to be kind of pitching these things. And I'm not against ref links at all. I've used ref links. I've made money off ref links. They're not bad, especially if you're pitching something or if you're talking about something that is a good product. But I think that you just want to always do your research before you choose any trading platform in particular, and always just be aware, like, especially for people that are new to the crypto space in general, or not even new, but like you're a buy and hold Bitcoin guy, or you're a buy and hold some altcoin guy, and now you're tired of losing money on altcoins, so you want to short altcoins, but you don't know what cross margin is, and you don't know what leverage is. Like, don't start putting real money behind this stuff, because that is the easiest way to lose a ton of money, and that's the last thing you want to do when you're just be very, very careful. We are fucked. I love there's nothing I love more, to be honest with you guys, than the up and down just sentiment of crypto. And as much as we were talking about fundamentals before, and all this type of stuff, we're talking about fundamentals, right? Fundamentally in crypto, the biggest thing I think is psychology. Like, that is one of, you can look at trades, and I know a lot of people are, excuse me, you can look at technical analysis, and I know that's kind of an extension too of psychology in general, of just human emotion, and a lot of those components. But I do think that when you are examining this industry, one of the biggest things is just the psychology of individuals, and kind of the capitulation aspects, and the absolute fear, and then the greed component. There is a variety of things when it does come down to this industry, and I think understanding human psychology is, and also understanding your own too. Like, it's really easy within this stuff to just absolutely freak yourself out, and quite frankly shit your pants when it comes down to owning Bitcoin or some crypto asset or whatever it might be. So it's always best to avoid that as much as possible. XRP Freak, classic name, great name. As you guys all know, I'm a huge XRP guy. Just kidding. But XRP Freak says, Bobby, who the hell is selling at these prices? Nobody I know. Well, you might need to expand your network a little bit, XRP Freak, because clearly some people are selling, and it's more people than are buying, as we see with the price of the crypto market at this exact time. There are indeed, in fact, people selling Bitcoin and a variety of other crypto assets at this exact moment. Kyle Hayes is, so shout out to Kyle. I haven't seen this level of positivity in the chats in a while. Only the idiots that hold will get destroyed. He's just been a bundle of joy and happiness, and I'm Kyle. It's a pleasure to see you here, buddy. And as always, it's wonderful, man. And so Stefan says this. This is an interesting. If you guys haven't seen this yet, there's a lot of cool. Is that pretty cool? So there's a lot of cool different DeFi platforms that we've seen in the past, and I'll give you a quick rundown of a few of them. Or two of my favorite recently that are coming out. So we also have State. This is a neat one as well. So for some of you guys that are interested in the cool products, I think, that are being built, whether or not you like Bitcoin, whether or not you like Ethereum, whatever it is, there are some really cool things that are being built in the quote unquote DeFi space in crypto right now. This is one of those things. We've talked about it before, but it is a way to automate your trading process based upon a couple of different set parameters. So there is what these are called sets. It's by set protocol, and they call these token sets. And so let's say for this one right now, we'll look at this. So they have different tokens, and they're based upon the moving average. So this is the ETH 20-day moving average crossover token, and it attempts to capitalize on short-term trends and accumulate ETH. So the 20-day moving average crossover token will automatically trigger rebalances. So when it goes below the 20-day moving average, it will sell its ETH for USD, or for DAI, I believe it actually is, or USDC. I think it's for USDC, excuse me. So it will sell ETH for USDC, and then if it crosses back above, it will sell that USDC for and buy back ETH with it. So basically, it is kind of trend trading based upon the moving average. And so what you do is you actually buy the token itself with your Ethereum, and then it will automatically do the rest for you. And ultimately, what it's trying to do, as it says, is to accumulate ETH in the long run and build up your portfolio that way by trading on the moving averages. So this is pretty cool because they have a number of different sets that you can do. You can also do weighted, so you can buy, if you have a bunch of ETH, you can buy weighted BTC and ETH, or you could buy a 75% token, or a token with ETH that is 75% Bitcoin, 25% ETH. And a bunch of different range-bound things as well. So that's pretty cool. I would definitely check that out. It's called tokensets.com. It's by Set Protocol. The other one that's interesting, and this is another project that I like. I know the guys at Staked, also work with them a bit with Proof of Talent. So Staked, I think, is a pretty cool company as well. But so they created this robo advisor for yield. They're calling it Ray. What does Stake do traditionally? They run proof of stake infrastructure for different types of crypto assets, primarily for crypto funds, family offices, institutional investors, etc. But what they're doing with this is they're allowing individuals to take DAI, and there are a bunch of different ways you can earn yield on DAI. DAI is a stable coin, kind of closely pegged to the dollar. Not always, but pretty closely pegged to the dollar. When you put your DAI into this smart contract, what it does is it evaluates who has the highest yield on Compound Finance, DYDX, or BZX, and then will automatically put your DAI to those places so that you're always earning the maximum yield in DeFi. So right now, the maximum yield that you're earning is 9.48% annually. So it will automatically, it's kind of a robo-advisor. It's like a Betterment or a Wealthfront, but for the DeFi landscape with DAI. So another thing that's definitely worth checking out as well. Obviously, with anything like this, there's smart contract risk and a number of other components. They have a smart contract audit by Trail of Bits, which is one of the larger security auditing, smart contract auditing firms out there, but still pretty cool, pretty interesting product in general. So Stefan says this, and I do think we can touch on this a little bit. There's been a lot of recent conversation around Lightning Network on-ramp. So I run a Casa node. It's great. I am positive on the long-term outlook of Lightning in general. But so SparkSwap is one that created a fiat on-ramp to bring money directly into the Lightning Network. So you don't have to go fiat, Bitcoin on Lightning. Kind of a long drawn out process, makes it difficult, or a longer drawn out process. Another one, Zap, which is run by Jack Mallers. He has created within the Zap wallet, which is a Bitcoin and Lightning wallet, he has created a fiat on ramp as well that they're rolling out, which is pretty awesome. I think that those advancements are very much necessary for success within Lightning. I do think personally that the biggest obstacle for Lightning isn't necessarily companies like Zap or companies like SparkSwap developing products. I think the biggest challenges for Lightning Network is overcoming the store of, or not necessarily overcoming, but kind of competing narratives. You have store value and you have this one narrative where like Bitcoin is this digital gold. It is this store of wealth, and it is this thing that you are going to hold on to, and one day it's going to be worth $1 million for Bitcoin or $100,000 for Bitcoin, and the price of everything else is going to go to shit, and you just want to stack Bitcoin as much as possible. And then on the other end of the spectrum, you have Lightning, which is primarily kind of built as this transactional layer, this fast, near instant transactional layer on top of Bitcoin, but you're still spending Bitcoin. So, or you're still trading or transacting in Bitcoin. So they're kind of competitive in a way, the store of value narrative with Lightning as a whole. And it makes it, I think, a little bit challenging to see potentially adoption, because ultimately some people are very, either they have a lot of Bitcoin or they earn Bitcoin and they're happy to spend it. But I think a lot of people look at Bitcoin personally as this kind of moonshot bet of this is my hedge against something, or this is just my personal bet against the kind of government currencies or the macro environment, or I just think that this asset is going to do really well in the long term, so I'm going to bet on its success. And not many people want to be the next pizza guy. And granted, there's a lot behind that as well, but not many people want to be the story of, hey, you know, I had a bunch of Bitcoin when it was worth now, let's say $7,000, and looking back a few years after the next halvening or something else, and Bitcoin's at $100,000. Not that many people want to be like, hey, you know, I had a bunch of Bitcoin when I was at $7,000, and this happened, that happened. I spent money here, I spent money there, and now I don't have as much Bitcoin, and it went all the way up. And if I just held on to it, I think that is somewhat competitive or contradictory to kind of Lightning. And I think that is the bigger issue, not necessarily the actual development of the technology. But I do think that the stuff that is being built out is absolutely necessary. Otherwise, there's no shot. But I do think that there is a good shot because there are good people developing this software. So taking a look at some of these comments here as well. Adam Noel says, sounds like BitConnect, give us money and we'll make you money. No, not at all. I think, and that's really the unfortunate thing about BitConnect in many, many cases, is now I don't think people, like in the cryptocurrency world, people are not able to separate the fact that there are legitimate use cases for lending and borrowing in the crypto world. There are very, very legitimate use cases. Compound finance. So robo-advisor for yield, Ray was staked, uses compound finance or DYDX. So let's say for compound finance, we'll check that out. We'll pull that up. This is another project that's had a ton of success in general. But for compound finance, you have people that are supplying tokens. So they're basically lending their assets out. You have people that are borrowing those assets. And because of that, you're able to, if you are supplying those assets, you're able to generate a yield. If you're borrowing, you have to pay money for that. That is very different than a legitimate, literal pyramid scheme that was BitConnect. And I think people either are intellectually lazy or they just want to group everything into one bucket, and like applying the two kind of components are completely separate. Like, for example, let's look at this supplying APR for Ether. If you were to supply ETH to compound finance, you would only earn 0.03% annually. That's no money whatsoever. 0.03% annually. If you were to do that with DAI, however, that's 8% annually. But contrast that to the Ponzi schemes out there, contrast that to Bitcoin, you were earning 1% a day. 1% a day, not 365 days. 1% a day. With compound finance, with actual like realistic rates, and these are kind of automatically done over time, but with compound finance, I mean, you're looking at for the price of ETH. I mean, that's a 30x difference on a daily versus annual basis, which is you can't compare the two. Enrique says, I love compound finance, making great consistent returns there. Yeah, that's awesome. I've been a huge advocate for compound finance and for the DeFi projects as a whole. The only thing that, to me, I mean, the big aspect is smart contract insurance. DAI is really cool. DAI is interesting. 8% annually is I mean, find a savings account where you're earning 2%, let alone 8%. That's incredible. But you still have risks as far as what happens with DAI, as well as potentially what happens with the smart contracts. If there's ever a bug, these aren't necessarily insured, so like there's nobody to go to. Your money's just kind of poof. Jackson says, "Don't worry, they have a trading bot." Yeah, don't we all, brother? Don't we all? R.I.P. and peace, BitConnect. Shout out to the old BitConnect crew. Where is it? Trayvon James, Ryan Hildreth, Crypto Nick. I wonder if he's in college now. Man, that kid probably banked so much money scamming people in high school. Oh Jesus, they were a crew. What was his face? Craig Grant too. Craig Wright, Craig Grant. There's something about Craig's in the air, man. That was a wild time. If you guys remember that, hopefully you did not put money in it and you have fond memories of it. But hopefully you didn't put any money in that crap. So I will start answering questions here as well. So if you have any questions on things, definitely let me know on it. So Kalo says, "What about BlockFi?" I'm a fan of BlockFi as well. I know the BlockFi team pretty well. I would say, I mean, the thing you want to do is just go to LoanScan. With LoanScan, you can check out the interest rate for these different assets. So for crypto or for US dollar, for all of them. And then you can look at the different platforms as well. So there's a bunch of, I mean, this is one of the biggest businesses right now in the crypto space. You have the BlockFis, the Nexos, the Compounds, the DYDXs, the Celsiuses, the Nuos. Now you even have, I mean, it's kind of funny because they actually compare it to Wealthfront, Betterment, and SoFi. And SoFi just got into crypto. But if you look at this, it is pretty crazy because if you look at, that's weird. I've never seen linen before. It must be sponsored. But if you look at the USDC rates versus what you get with a Wealthfront or a Betterment, if you were to lend on Celsius or CoinList with USDC, you're making 9% annually with Celsius, 5.8% with CoinList. On Betterment, granted, it's or Wealthfront, there's different things. There's no cryptocurrency involved. You're talking real USD. You're making between 1.8 and 2.2%. So pretty big difference there in general. XRP freak Bobby, who is selling? I have no idea, brother. I have not the slightest clue on who is selling cryptocurrency. I personally have bought more. I am also an idiot 99% of the time. So typically, it is what it is, man. Mike A, thoughts on Tezos during the sell-off? I still have my Tezos bag. I still am baking Tezos. I'm also going, I think I'm going to stop by the Tezos conference there's a TQ Tezos, which is one of the big kind of like development shops. They're kind of like consensus for Tezos. But TQ Tezos is having a conference in New York City on Monday and Tuesday. If you're there by any chance, definitely let me know. But I think I'm going to stop by there at least on one of the days to the TQ Tezos event just to see what's going on. Also do some networking for Proof of Talent and a variety of other things. But I mean, I'm still pretty bullish long term on Tezos. I've been staking for freaking forever. And it is what it is. Tezos is obviously down quite a bit, but I'm still bullish in the long run. Tether is always holding strong. Stefan says, are you planning on checking out Binance US? Luke's mentioning or referencing Luke Martin from Venture Coinist. Luke's interview with Catherine Cooley, the CEO, is pretty good. I signed up to check it out. I have not signed up for Binance US yet. I likely will. I'm a huge fan of Luke's channel in general. I think Luke Venture Coinist is one of the best dudes in the space, so I think he's awesome. And I also have talked briefly to Catherine Cooley in the past from Binance US. Have a lot of respect for what her and the team are trying to build. So I have not signed up yet. I also don't know off the top of my head. I haven't checked, but if they are open to New York yet, or if that's just certain assets. So something to something to think about. But yeah, I'm definitely not opposed to it. I've just been super busy with proof of talent, so that's kind of where I've been at now. So Organic FUD, shout out as always, my man. Is the entire crypto space a money grab? Well, there are a couple different things, I think, when you look at the crypto space. There are definitely money grab projects, and you have to think about incentives. And this is something that I've thought about kind of more and more over time, is incentive alignment in the cryptocurrency world. It's the entire world is run on incentives in general, but incentive alignment in the cryptocurrency world, specifically in regards to a lot of projects and funding and continued development. So why do I think about incentives? Why do I think they're generally important? So for like the ICO space, for the token sale space, or for these companies, especially a lot of these new like VC chains that are coming out now, you have like the Hederas or the Algorands, a bunch of those. You have a lot of these different projects where you had investors come into the space very early, say it was late 2017, early 2018, put a lot of money in at a relatively low valuation. Let's say the valuation was $50 million or $100 million. And all of a sudden, this token is trading at a $1 billion, $2 billion, $3 billion market cap. If you're making 30x in your initial investment, they're going to be taking some profit for sure, right? They're going to be taking some profit. So there is not a ton of demand for these new assets. And you're starting to see, obviously, when those come online, you're starting to see a pretty immediate sell-off. You've seen that with Algorand. You've seen that with HBAR. You've seen that with a lot of these other new kind of ICOs that have happened, and you're also seeing it with just ICOs in general as the overall kind of supply and demand. So I don't think like in totality the space is a money grab. I do think that there are a lot of misaligned incentives in the long run that people still have not figured out. When you do a token sale, for example, if you raised a company raised, let's say $100 million in an ICO, $100 million in a token sale. They have $100 million in the bank now. There are no specific rewards. There are no specific guidelines. There is no specific instructions for them to do anything. It is basically up to them to build something. Number one, because of like good faith. You're trusting essentially that somebody there is building this technology in good faith because you actually think that they're going to create that, but they don't have to. They've already raised the money. There is not necessarily another kind of need for them to maybe raise money unless they want to go ahead and do that again, but they're not going to do a second token sale most likely, although some companies have. They're probably not going to do a second token sale. So when you already have all the money up front, what is the incentive structure there? It's to hopefully figure some things out and make it work, but there are a lot of misaligned incentives as far as the industry has gone in general. You also have some things with developer incentives as well. Like I've talked about it before, but you have the fair launch proof of work cryptocurrencies, the Bitcoins, the Bitcoins, the Litecoins, the Grins of the world that launched without a pre-mine, that launched without a token sale. But for some of those cryptocurrencies that are smaller, fair launch crypto assets, it is very difficult for them to continue funding dev operations because they're not taking a pot. They're not taking any bit of the mining rewards. They didn't have a token sale up front, so they don't have a lot of money in the bank. So there's a bunch of things that are wrong with the industry in general, I think, and you're starting to see companies building realistic businesses with actual paths to profitability and or revenue models. That's important, and that's also something for me like that I try to focus on a lot with proof of talent is let's say, for example, you're interested in a job in crypto right now, right? You want to work in crypto, but you work at a good company, you have a good job, you make money, and you work at a quote unquote normal company. It's a company that generates revenue and is profitable, or like has another pathway to raising another VC round. Let's say it's a Series B company and it's going to raise a Series C and a Series D and it's going to IPO, right? That's probably going to happen, whatever. And you're looking at working in the cryptocurrency industry. You likely want to go work for a company that you know is going to be around in a few years, right? It's not just investors, it's also the people that are potentially going to work there. So how do you know a company's going to be around? Well, they need a business model. A lot of companies raised money without a business model, and that is the problem that you see when you're examining a lot of this stuff. There's no way to make money outside of the initial revenue generation event, and it's okay. You raised a bunch of money. Well, how long is this going to sustain? How long is this money in the bank? How long can we manage this treasury before we actually have to figure out a way to bring in revenue? On another important note, Food Tree says Sour Patch Kids or Swedish Fish. Sour Patch Kids, 100%. Watermelon Sour Patch Kids are goat candy. Big Sour Patch Kids guy. Although they're terrible for you, but I'll eat them every like twice a year. So taking a look at some more of these questions. So and again, my man XRP Freak has been very active, so I appreciate that. But so he says Bitcoin, Stellar, Ripple, Ethereum, and IOTA are being adopted and implemented on an enterprise level. That's how you determine the winners in this space. I do think that is important. However, it still doesn't necessarily justify a valuation for the price of a token. And that's also, aside from the initial, so I'm on a soapbox rant now, of course, right? But aside from the initial issues that you have with the incentives around raising money and then continued development, you also have really bad, I hate the word token economics, but kind of token economics, I guess. A lot of these assets are designed to basically dump. Like, there are a lot of components around whether it's a token sale or something like that where you just have this consistent sell pressure. Like, for example, XRP with Ripple. Ripple may be getting a ton of adoption. Ripple may be doing really well as far as bringing banks on board and maybe signing up new customers. But if you probably don't own Ripple equity, I would assume. And if you have XRP, for example, Ripple is mostly funding its operations through the sale of XRP. That is a negative, or I would say kind of an inflationary aspect to the XRP price. And I think it has kind of suppressed the price over time, as you've seen in 2019. So I think that's one thing to consider. You also have a number of other assets out there that, like Stellar, has a very high inflation rate. Stellar has done very poorly over time. Zcash might be building awesome technology, might be doing really cool things with privacy, and has a very strong team of computer scientists and cryptographers and people like that. But the supply rate is massive, and then you also have people that look at that and say, supply rate, founder's reward, I'm out. And you've seen, if you pull up the ZEC chart against BTC, it's an ugly chart 99% of the time. So something to just kind of always think about is, even if you're looking at enterprise partnerships, the Enterprise Ethereum Alliance with Consensus, that also kind of pumped the price of Ethereum for a long time. In 2016, 2017 was one of the big things that brought quote unquote legitimacy to Ethereum. But when you look at that, does that actually translate to an increase in value in ETH? And I'm bullish on ETH. I own a lot of ETH. I'm happy owning ETH. But do I think the partnerships there, the Enterprise Ethereum Alliance or anything like that, actually contributes positively to the price of ETH? Maybe in 2016 when the world was driven by announcements. Maybe in 2017 when things were driven by announcements. But now, no, I don't. What's up, M. Flanders? What's going on, man? He says, hey, Bobby Flanders here. I'm a hodler. Do you know anything about Google's quantum computing and about blockchain vulnerability? So I've had a few people send me this article in general about Google and their new kind of paper that they published. We'll pull it up. So you probably search Bitcoin and there's probably some ridiculous article. Sorry about that, folks. So you had Google come out with this so-called quantum computing breakthrough, and immediately as soon as this happened, there were a number of folks that said this puts Bitcoin at risk. This puts anything associated with Bitcoin at risk. Anything utilizing kind of the algorithms associated with it. And this is a massive security risk, and we are going to be in trouble, and Bitcoin is going to go to shit, and everything is in trouble. So this is something that I think probably needs a lot more further examination on. I am not one to think CoinDesk is necessarily the best, or excuse me, Cointelegraph is necessarily the best source, but let's see if we pull this up. So also, I mean, always questionable, but you have a couple people, Bitcoin core devs, coming out and saying that this is indeed not any type of vulnerability and not something to worry about. If I can pull up the tweet here. So there have been some people that have come out and said this is a problem. Some people that have come out and said that this is something that should not be worried about. So you had Peter Todd come out and say it means nothing because Google's quantum computing breakthrough is for primitive type of quantum computing that is nowhere near breaking cryptography. We still don't even know if it's possible to scale quantum computers. Quite possible that adding qubits will have an exponential cost. So you had a bunch of people that started to talk about it. Mike in Space, who has a decent sized following, was kind of asking the question on what it means. And I think that just in the long run, when a headline like that comes out, there needs to be a lot more examination that goes on beyond just saying, "Oh wow, quantum computing. I heard quantum computing in the past is going to be bad for Bitcoin, and now this kind of news broke, so obviously it's bad for Bitcoin." Just wait and see. I don't think that you have anything to worry about at this point in time, and something to keep an eye on. But I don't think it's anything really in the long run, really. So, Organic FUD says this. How can they rebuild the 2017-2018 hype around crypto? Seems impossible. Part of me thinks it's impossible. And part of me thinks that human nature and just this industry repeats and cycles over time. So I don't have the answer one way or another. But I do think that the 2017-2018 hype cycle is one of the craziest things I've ever seen in my entire life. One of the craziest things to participate in ever. Like, it was nuts. I mean, we have like 300 people on this YouTube live right now. A few people on Twitch. So we have a bunch of people on YouTube live having a good time. 300 people. At the peak, there were typically like over 1,000, 2,000, 3,000 people on the crypto happy hours, which was just absolutely nuts. It was outrageous. It was crazy. I was getting like 1,000 new subscribers a day. I lose subscribers now. There still is a waning interest in retail, and it does come down to a lot of people bought different cryptocurrencies and were sold this dream, and the dream did not materialize. And there are only so many people with really that level of conviction or delusion in these assets that are going to stick around long enough to continue to hold. And people lose interest over time. And maybe even if you still are holding, you're probably just like, I don't want to look at this stuff anymore. I have friends that I have buddies that bought Cardano at 5 cents, rode it all the way up to $1, and are still back now. And they're like, I bought like $5K at Cardano, rode it up to $50,000 and rode it all the way back down. And now I'm even in the red. So there are people that bought a bunch of altcoins, kind of either rode it all the way up or bought the top and have gotten absolutely smoked. So there is an aspect to like the ever seeing another bubble again that I do think that there are a lot of people that were negatively affected by it. And I mean, you could certainly see it in the comments as well. You could see it in the comments with how things go. There are a lot of people that are, I don't want to say kind of like disillusioned or just very spiteful and not happy with the industry as a whole. And I don't blame anybody for that at all. I also think everybody always needs to take if nobody put a gun to your head when you're buying this crap, then it's on you. It's on every decision I make is on me. Every decision you make is on you ultimately. I think you can be influenced by people, but every decision ultimately you make is going to be on you, and vice versa for me. So I do think that there is an element of people in general that got absolutely smoked in this last bull run that don't want anything to do with this stuff ever again. And I also do think that human nature dictates that if there is another run up, people are going to start telling their friends, and they're going to start bragging about how much money they make and this and that and the other thing. And they're going to start doing dumb crap again like they did in 2017. And all of a sudden you have this another bubble and you have this another run up, and it goes and it goes and it goes. So I think the industry is cyclical. I think you have this boom and bust mentality typically where you have, I got into the industry in 2013. In December 2013, I bought the first Bitcoin top, and it went up to $1,000, went all the way back down to $200. And I was like, this sucks. This is not fun. I don't want to look at any of this stuff. I don't want to think about any of this stuff. But if you stuck around in that time frame, there were a number of different opportunities, and you could have done really, really well. But most people didn't stick around. And then a lot of the people that were around that didn't stick around, they just, as soon as things started going on again, as soon as the ICO boom came back and a lot of the things happened, they kind of rushed back in spades. So I just think history repeats itself at some point. There are some elements, though, that make it hard to comprehend. Hank Miller, been here since 2017, got smoked. Yeah, same, brother, same. And so Jeff Scroggin says, is it conviction or is it delusion? That's the question, right? Am I the smartest person in the world for having a bunch of my net worth in Bitcoin, Ethereum, and quitting a job at a Fortune 500 company and working full-time in the industry and creating a recruiting firm that works exclusively with blockchain and crypto assets? Maybe I'm a genius. Maybe I'm timing this perfectly. Maybe I'm going to be back working in software sales at a Fortune 500 company in 3 years because quantum computing broke Bitcoin and the entire asset class got disproven. I'm obviously betting on one thing over the other thing. I'm willing to take that risk. I'm a young person. I can handle it. I'm happy with it. I'm cool with it. It is what it is. But other people, there's a fine line, it seems like, between conviction and delusion in the cryptocurrency space. So Brian says this, I think BNB is the only coin which will do good, which will do well. Just going to correct that, even though I can't speak 90% of the time. I think BNB is the only coin which will do well because Binance will profit even if it's a bear market. So it's an interesting point, and I do think that when we were previously talking about these assets, and so we can pull this up. I don't have the... So when we were talking before about cryptocurrencies or crypto assets and not having a proven, let's say, use case or not having figured out the token economics, some of the only, I'm confident in Bitcoin's just kind of supply and demand model as well as the digital gold thesis and the economics behind it. I'm confident in the long run in that. I'm also fairly confident in ETH transitioning to ETH 2.0 and staking and how the issuance is going to change there and some of the growth trajectories for ETH. But outside of that, some of the only other assets that really are designed to perform well are exchange tokens. And why do I say that? Well, BNB is kind of one of really the originators. There's been others that have happened in the past, but BNB is, I think, the one that kind of brought this to prominence. And Binance Coin was an ICO, but it takes a percentage of their profits and rebuys BNB, and also has a number of different components where you can kind of use it and it can increase the utility of it. But Leo as well with Bitfinex, another interesting one where Binance is obviously a profitable company. They print money. They do extremely well. Bitfinex made, according to their Leo burns, because you can do a reverse calculation, Bitfinex made $34 million in revenue in Q3, which puts their kind of total revenue for an annual basis at over $100 million. And you can calculate that through their burn of Leo, because they burn that on a daily basis and publish that information. It's available on chain and a variety of other things. So I do think that as of right now, I don't know if Binance's pullback or BNB has pulled back quite a bit from its highs of the 35 plus dollars. Leo has also pulled back from its high of around $2. It's right around where its issuance was. It's at $1.04, but it's holding up pretty well right now, which is nice because it's kind of saving my ass a little bit. But I do think that the exchange token model is definitely something that is one of the few that actually has a kind of proven use case, because you have these profitable companies that are buying back the token. So it's not an inflationary coin, it's a deflationary coin. So all else being equal, it should perform fairly well. That's saying should. The entire market typically moves cyclically, and when Bitcoin's down, everything else is down anyway, so it doesn't make a damn difference. But I do think that when you have some of the only profitable companies having these kind of pseudo securities, something to always check out. So taking a look at some of these questions here. So it's also kind of funny too, because I've seen a very quick reversal on people's thoughts on CZ and Binance. Like for a while, Binance, CZ seemed kind of like the heroes of the industry. Everybody loved them. Everybody would always speak highly of them. And now a lot of people are negative. I mean, in the comments, there's CZ is shady. People are afraid to call it out. Binance is looking slimy and sneaky. BNB is going to take a dump as more exchange comes online. There's a lot of, and if you look at like his comments on Twitter, but when the price of BNB was going up and crushing it, everybody was, he was a god. He was the best thing in the world. So it is interesting to see, again, how sentiments change and shift in the industry when you think about all of that stuff moving forward. I would say that for Binance and for a lot of these other exchanges, there needs to be differentiation, and that's kind of one thing that I think about when you look at all these exchanges coming online. There's a lot of other ones out there, and I feel like that's the one place. It's the one proven business model in crypto right now is building an exchange. It is like one of the only things where people are actually bringing in significant amounts of revenue, because what's the use case of the cryptocurrency industry right now? For the most part, what is the biggest use case by far? It's speculation. Everybody is speculating. They're trading. So what are the speculation houses? What are the casinos? They are the exchanges. They are the BitMEXs, the Binances, the Coinbases, the Geminis, the whatever, the Krakens, who knows? So you have a lot of these exchanges that are trying to now compete with those big dogs, because they see, hey, Bitfinex, look at Bitfinex is not the greatest reputation in the world by any stretch. Still made $120 million in revenue on pace for over $120 million in revenue in 2019, a pretty down year in terms of volume. And I think they have less than 100 employees. It's like what, $1.2 million per employee or something like that. That's a lot of money. That's a lot of profit. That's a profitable business, most likely, unless all your money is held up with crypto capital. But hey, it is what it is. So So MTS has any chance this is a fake out prior to Bull in Q4? I am going to be deadly, blatantly honest. I have not the slightest clue if this is a fake out or not. If I knew, I would be in a much different place. I'd be actively trading and I'd be doing a lot of different things. But I don't know. So again, macro wise, nothing's changed. Everybody that had a Woody for the halving coming up in the near future, and for The institutional on-ramps that are being added. Everybody that was super excited about this stuff is now petrified. Nothing's changed. Nothing major has happened. Unless I find news that really breaks otherwise, I don't know. I'm going to continue to do what I do. I'm going to continue to dollar cost average. If there are massive dips that come through, I will continue to buy more at that specific time. But yeah, that's where I'm at. Host Beef says, how come no one ever checks out Binance's code? Their DEX is not even decentralized. I personally have not used Binance Chain or Binance DEX. I just haven't gotten a chance to do it, and I really haven't had a need to do it. I haven't been actively trading really at all. My portfolio has been chilling in the same place it was, basically Bitcoin, then ETH, then Tezos, then Leo. So that's basically been my portfolio for the past probably 5 months, plus a BSV short, which is not the worst thing on the planet, which thankfully has been hedging me getting my face ripped off on the other just kind of spot longs that I've been in. So Mr. Brown, give me a hell yeah, hell yeah. Brian A says, what is this hype about Chainlink? Should I buy BTC or Chainlink right now? Chainlink has the strangest 4chan army that this world has ever seen. Chainlink to me is actually pretty fascinating because, let's see if we can pull up Masari. Chainlink is probably one of the most valuable like ERC20 only tokens. It is worth over $500,000. It's worth 0.5 billion, so it's worth like $550 million liquid market cap. It's on Binance, and it had a crazy run up in basically when every other altcoin was in a bear market. It ran up all the way from 20 cents to a peak of about $4, and has now kind of started to lose a little bit of steam. I personally would not have any interest in buying Chainlink at this point in time. I get the use case. I get a lot of people are really, really excited about it, and that's great. I am somebody that looks at these crazy run-ups, and then I start to see kind of, again, I just think about this stuff psychologically speaking. I would expect a lot of people that bought in this range, post June, that are going to start to continue to sell. They're going to start to lose hope that, hey, this is done pumping. This chart's going to have a full retrace. So I personally would not have a ton of interest in buying Chainlink at this spot. And I would actually think, personally, I haven't done it at all, but I might even think about shorting it here now that I'm just looking at this chart in general. It does not look like the worst short I've ever seen. So, hey, if the market continues to go down, I think Chainlink has probably a higher propensity to drop than BTC. So a Chainlink short might not be the worst thing in the world. Like when I look at this, I kind of think about something that I see with like a Tron. So not to compare them at all in any way whatsoever. But we need to do this into the past year. So Tron had, let's see. See if we can find it. Actually, why am I doing this here? So Tron had that wild jump up from kind of similar time frame from November to all the way to January of 2019, and Tron peaked when they had their BitTorrent acquisition and they were doing the airdrop for BitTorrent. There was this huge demand. Basically, if you bought TRX, you would earn BitTorrent through their airdrop. So there was this kind of huge bull market catalyst where you had this run up of Tron that went from the bottom to the top about 180%. I actually shorted Tron and then exited it because I was an idiot. I shorted Tron around here, so pretty close to the damn top. I think I closed it for like a 10 or a 15% gain. Unfortunately for my position, Tron is down 80% against Bitcoin since then. So The prospect of something having a full retrace after a pretty sustained altcoin run is definitely there. So, in the fact that Chainlink is worth $500 freaking million, I don't know. That's just me. No more FOMO, indeed. I am hashtag your most average white dude ever, as you should know. Can anyone afford a super chat? Kyle, well, maybe you can. I don't know. Dale Thomas, sorry you came in late. So Wooter Robin says, "Hey Bobby, I hope your ETH CDP is still alive." I think so. I bought primarily one of the reasons I bought more ETH recently actually was to top up my CDP. I think my liquidation price was at 134, which right now is where are we at with ETH? We're at about 160, 159. My liquidation price was at about 134, which is pretty scary to me because we're at 159. It does not look like. I mean, all we need is one more little dip, and we are. I'm getting liquidated. So I bought more ETH and put it in, and now that's at about 123 or so. So a little bit more comfortable, but still, I'd probably want to kind of continue to top up that CDP to get me in the maybe like $100 range. That's kind of where I might feel safe because we're $60 away from that is still pretty scary to me. Alex, what's going on, man? Hope all is well. So this was something Stefan mentioned this, relatively interesting. 3 hours ago, this came out. So Venezuela has a Bitcoin stash, and they don't know what to do with it, according to Bloomberg. Basically, Venezuela's central bank has been trying to figure out what to do and with the Bitcoin that they essentially hold at this point in time. And this was, I think, part of the Petro effort. If you guys remember I don't know how long this was lived, but the old Petro coin with Venezuela, where they were accepting BTC and ETH to have kind of a central bank with their ETH token. And they have had a mightily shrinking reserve in the billions of dollars. So they've been looking at what to do. I haven't read the full article. I saw the headline, so I don't want to state anything necessarily on it without actually reading the article first and getting some type of education on that. But yeah, interesting nonetheless. You really haven't seen any. There's been a lot of talk in general about governments, really, and central banks holding Bitcoin on their balance sheets, and you have not seen. I don't think anybody do that yet. And Venezuela is maybe not the trendsetter that a lot of people would want for this to happen, but I suppose it would be interesting nonetheless. There's obviously a lot of strife and political unrest. And economic uncertainty and really some not great things that have gone on in Venezuela. So I certainly wouldn't want to be super excited about them being the first ones to do this. But it'll be something worth keeping an eye on regardless of what happens, just because, yeah, it'll be wild to watch. Brian A says, "Is it true Ethereum doesn't have a fixed supply? If true, then that's a deal breaker. Don't you think so?" That's a good question, good thought process. So yeah, Ethereum supply has not really been fixed, and that has been definitely one of the, I would say, detractors of it, or one of the things people point to as with Bitcoin. One of the biggest, if not the biggest, value proposition of Bitcoin is what the supply is. Bitcoin supply was determined for better or for worse on day one. Whether or not you like that, if you don't like that, then don't buy it. If you like that, that is probably one of the biggest reasons why you like that and you are a supporter of Bitcoin, because There is not going to be a government entity. There is not going to be anybody that says, we want to print twice as many Bitcoin in the next block. We want to print a bunch more Bitcoin. We want to have quantitative Bitcoin easing, whatever. That's not going to happen with Bitcoin, or that is kind of the thought process around Bitcoin. Some people argue it can, but that's another story for another day. That is one of the biggest value propositions or things that people point to with Bitcoin. With Ethereum, the supply is a little bit more opaque, and that is one of the things that especially a lot of Bitcoiners point to that are anti-Ethereum point to, as far as like, hey, this supply is controlled by a couple nerds, or this is just something that you don't know what the supply is going to be, and it could be changed at any point in time. I do think that it is something that can be overcome, and there are slightly different use cases for what they're trying to be and how they're trying to accomplish things. So I don't think that is, quote unquote, as you had mentioned, a total deal breaker, but it is something that I think is an issue that Ethereum and the Ethereum community has to overcome because of Bitcoin's value proposition in general, and why a lot of people are so positive about Bitcoin because of its fixed supply and predictable supply as well. Vital lick my buter and Crypto Bobby. Am I wearing pants? Got shorts on. my Rhone shorts. If you guys remember those podcast advertisements for Rhone, RHONE, love these shorts. Big fan. Former podcast advertiser. They're great. Andre says ETH is not money. ETH is not money, neither store of value. It doesn't need a max supply. People in the Ethereum community would argue with you on that. To be very honest with you, I have zero interest in arguing whether or not something is money. I have other things on my plate other than saying Bitcoin is money, ETH is money, and two sides going at it like that. So I'm gonna stay away from that. But I do think that again, it is something that the lack of predictability long term around Ethereum's or the ETH supply is definitely something that is of concern and or a point of conversation for a number of different people. And folks, at this point in time, I've been live for it's been over a full actually crypto sat hour. And as much as I would love to hang out here for the rest of the day, I have a couple different calls for Proof of Talent, a couple different candidate calls, a couple different interviews that are set up this afternoon. So need to take care of that, but really wanted to pop in while things were going absolutely haywire. If you enjoyed this video, if you enjoyed hanging out here for a while, make sure to bang that thumbs up button, hit that like button as much as possible. Bang the damn like button or the thumbs down button if you think I'm an idiot, which is fine too as well. But yeah, I got to get back to work, and looking forward to that as always. If you need anything, always feel free to sound off in the comments. And as always, if you happen to be interested in the blockchain and cryptocurrency world from a career standpoint, looking to work full-time in the blockchain industry, especially if you're a software engineer or a developer and you're looking for a gig, I'm working with a bunch of different companies in the Bitcoin space, in the DeFi Ethereum space, in the infrastructure place, in the exchange world. I have about 10, 12 clients right now throughout the US that are hiring. So if you are looking for a job in crypto, make sure to go over to proofoftalent.co and check me out over there. Send in your resume if you'd like as well. We'll get back to you as soon as I can on that. But really do appreciate the time, everybody. Thank you so much. Crypto Bobby signing out. Hope you have a good one. Peace.